and welcome. You're watching Business Today Television. I'm Sakshi Patra. Well, it's the International Women's Day tomorrow, that's March 8th, and it is truly refreshing now to see the growing number of women who are actually taking charge of their financial future by planning with a sense of empowerment that can be seen now, and independence with a lot of financial independence that's now coming into the wake of women as well. In a society where gender roles are constantly evolving, it is women who are free from the traditional constraints and asserting their financial independence perhaps like never before. In recent years, ladies and gentlemen, we've seen that there has been a noticeable shift in women's attitudes towards financial planning, towards the way they handle money. Women have stopped solely relying on their partners or family members for financial decisions, and they're taking matters into their own hands as well, becoming more informed, engaged in managing their finances as well. And this trend reflects not only an increased financial literacy among women, but also a strong desire for autonomy and for self-sufficiency. It is towards this aspect that we thought that we will bring to you this very special show, where I will be joined by two very special women who've achieved a lot in their own feet when it comes to financial world as well. Supriya Rathi is joining me. She's the whole-time director at Anand Rathi Insurance Brokers. Also joining in is Sugandha Sachdeva, who's the founder of SS Wealth Street. Well, welcome to both of you. And here's wishing you both a fantastic International Women's Day. Tell us, Supriya, let me begin by you. What does Women's Day really mean to you? And what is it that this year you want to achieve for yourself as a personal capacity and for your teams at large?
Thank you very much, Sakshi, for having me on the show. Very happy Women's Day. It sounds cliched, but I think every day is Women's Day. It's nice that we celebrate it in particular one day, but I think especially in the field that we're in, we have a lot of empowered women, and increasingly so. So I think yes, we just have to take things into our own hands. Our capacities are just as much. Equality is a large part of equality has to do with literacy. And I'm glad that shows like this actually help people out there feel a little more empowered, bring to light something which is really important, which is financial planning. So great to be a part of this show.
Okay, thanks a lot. The pleasure is ours to host you. Sugandha, what about you? You've been at the forefront of financial planning from at least 1.5 to 2 odd decades that I know that I have been interacting with you. And from commodities to stock markets, mutual funds, you've been at the helm of affairs, listening to a whole host of queries from women that come to you as clients as well. Tell us what comes to your mind first this Women's Day when it comes to financial planning for women?
Hi Sakshi, thanks for inviting me on your show and wishing all the viewers, my co-panelists, a very happy International Women's Day. So on this Women's Day, I think women participation in the workforce has been increasing, and as you maintained, they have been asserting themselves in the space of financial markets. And as we also speak to female viewers and people who are interested in the financial market space, there's a lot of enthusiasm and they want to take their own decisions, especially the age group of around 27 to 34. They're actively participating in the financial market, be it through the gold investments, silver investments, or the mutual fund or direct investment in stock. I think there's a need for more financial inclusion to empower women and to provide them equitable opportunities and to provide them a lot of financial independence. So I think we need to boost financial literacy a lot more, and shows like yours are doing a lot more in that direction. So kudos to you. And on this this Women's Day, I think it's a new beginning for me as well. We have started operations at my new venture, SS Wealth Street, where we are providing equity, commodity, and currency research. So we not just provide equity research and commodity research, we want to be a trusted ally for our clients and to help them in achieving their financial goals by providing a holistic support system. So I want to grow my organization and take it to new heights on this Women's Day. This is my aspiration for this year.
Okay, well, Supriya, let me start by you. You know, a lot of our women viewers, of course, more and more awareness is starting off as to, how it is extremely important for women to have financial independence. And just like their male counterparts, they need to start in early, start saving for their financial future as well. You tell me, what do you tell the clients that come to you? What is the first step that all the women out there who haven't yet taken that first step towards financial planning must start off with?
So I think the first step is to sit down with your family, all the stakeholders in the family, and depending on which life stage that you are at, put in place a financial plan, which is for the next 15, 20 years, which takes care of certain landmark capital expenses that you will have over the course of your life, be it children's education, children's marriages, purchasing your first home, retirement planning, and so on and so forth. And based on that, look at the capital expenses that you will have, or the encumbrances that you will have over a period of time, and pay that back to current. How much do you need to save to be able to actually arrive at those goals, and work upwards from there? This is the amount I need to be saving, and then start, obviously getting to know the various asset classes. Asset classes, I mean equity. Equity is through either stocks or equity mutual funds in the stock market. Then there is debt instruments such as PPF, such as bonds, debentures of companies, which are slightly less risky and more about capital preservation. And then there are, bank accounts, saving accounts, fixed deposits, which have slightly lower returns, but of course the safety and
Right.
the risk is much lower. So look at all the asset classes, and of course there's gold, real estate, and so on and so forth. So look at all the asset classes. It's important to have a well diversified portfolio so that your risks are well thought out, and at the same time a portfolio which is adept at being able to preserve and even grow your wealth at a rate which is more than the inflation rate, so that your purchasing power continues to grow and your long-term financial goals are taken care of. So planning is very important, knowing asset classes is very important, and that's really the first step.
Okay. Sugandha, let me bring you in the conversation as well. Of course, it's easier said than done when we talk about that, okay, you start saving for your goals. Diversify is like, okay, we always talk about that, you should have exposure to all the asset classes. But how does one really decide how much goes where? And, how does one align goals with specific investment options? That's something that confuses a lot of women out there. What do you really suggest to all the women clients out there as to what is easier for them to manage as well, to keep checking their portfolios, a simplified portfolio to begin with? What exactly is essential?
So traditionally, Sakshi, women investors have been investing in FTs and slightly in real estate, and more specifically in gold, because they understand gold and they have a lot of affinity towards gold. But then they have been traditionally investing in gold ornaments. So now it's a time to look at other financial avenues also. Even if you are investing in gold, there are a lot of avenues for investing in gold, which saves you from the cumbersome perspective of storage, theft, purity. So you can look at gold bonds, you can look at gold ETFs or gold mutual funds. So which are very easy to invest in. I mean, if you look at gold bonds, they provide you safety and an annual interest of around 2.5% per annum. Apart from this, if you are looking at diversification of your portfolio and you also want liquidity benefits, so then you can invest in gold ETFs. Alongside this, if you do not have any demat account, then you can look at gold mutual funds, wherein you can also do SIPs on a monthly basis or a quarterly basis. You can decide that, and you can start from as low as rupees 500. So these are the various options which are available to you in case you only understand gold. But then besides this, I would also like to talk about mutual fund industry where you can certainly park some amount of your funds.
Right,
They are
right.
professionally
But
managed.
let's stick with gold first. We'll come to mutual funds again, Sugandha. So gold, of course, today is the day when it's again hit an all-time high. It's been shining brightest. So age-old saying that our ancestors have been focused so much on gold investing, be it for auspicious occasions, weddings. But large part of Indian women still go ahead and go for purchasing of physical gold. Now, should one really ideally see that as an investment, or is it purely only for consumption? It's not seen as a pure investment per se towards gold. How would you really advise them if for every woman it's important to have some gold as wearables, but on the other hand gold as an investment opportunity? How does one really define how much of what is needed between the two?
So I think one should certainly allocate 10 to 15% of your gold into other revenues. So gold for consumption purposes does not come as a part of your portfolio, even though gold prices have been surging higher from levels of around 5,000 to 6,000 20 years back. Gold prices are currently trading around 65,000. And in the last 20 years, gold has given CAGR returns of around 11.9%. So it has been steadily growing. But then if you have a slightly investment perspective, so that should be kept separate. And for that, you should look at other financial avenues, which I just spoke about. So for that, you can allocate 10 to 15%, and you can also include silver in that. So 5% can be allocated towards silver, and 10% can be allocated towards gold through either of these avenues, be it gold ETF, gold bonds, or gold mutual funds, or digital gold as well. And you can also look at the leveraged platform of MCX, where you can invest or trade in gold futures, be it the mega lot or the mini lot, as per your risk appetite and time horizons. So these are the avenues which you should explore. Apart from that, I think there are other avenues also. I mean, you have certainly been investing in physical gold, but I would also like to talk about the mutual fund industry, which we could not speak earlier.
Yeah.
Apart from that, I think you should certainly look at investing in mutual fund because they are
Sure.
professionally managed,
Sure,
and they
sure.
also diversify your portfolio. And if you also look at the inclination of women investors, it has been growing in the mutual fund industry in the last several years. If you talk about the recent data, the women participation in the mutual fund industry has increased by almost 100% in the last 8 years. So
Wow.
AUMs of mutual fund industry are currently standing at around 50 lakh crores. So equities, if you talk about per se, they have in the last 20 years generated a CAGR of around 14.9%. So they also offer hedge against other risks. So hedge against inflation also, they provide a lot of liquidity, and they also provide better returns over a long-term time frame. Women in general are slightly risk averse, and they
Sure.
are inclined more towards longer term investments, which provides them the benefit of compounding as well. So mutual funds are also a very good option for women investors to look at. So in general, Supriya has also spoken about the debt market. I'm not tracking debt market very closely. So I would just stick to direct equities, gold, silver, as well as mutual
Sure.
fund industry. So these are the
Okay.
avenues which women investors should certainly look at. And I
Okay.
think women investors have been making a lot of smart decisions in the recent times, and they are shaping the future of investing as well.
Absolutely. And of course, they're getting more and more aware, when it comes to the newer options of investing, and they're not as risk averse as they were some time back. They're willing to take risk with their money. They want to be aware about what's really happening in the world. I can see all around me that women are more interested in now investing even more than men, and they are taking even active participation. Supriya, tell me, what has been your own experience of planning for yourself, in the journey that you've seen thus far? How did you start? When did you start? What all did you start off with? Did it give you results? Did you change some things on the way? If we can learn from your own experience so that large part of our women viewers can benefit.
So since I come from the finance and insurance background,
Yes.
I started my journey fairly early, and of course, life goals keeps changing with age. But I think what has worked really well is having a long-term outlook, and not being able to not and having the discipline actually to not time the market. And I think that has really worked well for me, especially when we talk about equities. Like Sugandha also said that equities have given us close to 14-15% returns, and it's probably the highest amongst all of the asset classes. But when that works for you is when you have the discipline to keep the money for a longer term horizon. Having said that, of course, you've got to have some liquidity. Part of your money, put in asset classes which are more liquid. But having that long term horizon, keeping the discipline, and aligning with your goals has really worked. And of course, insurance, I think, is a bedrock because I have seen so many financial plans go awry if insurance is missing, particularly in case of health insurance and in case of life insurance. Term plans are an absolute must and must form the bedrock of your financial plan. Because an
Well,
accident
absolutely. Supriya,
is
you mentioned absolutely, you hit the nail on the head by talking about insurance. Tell us, what are the latest statistics? Are women getting their own, independent insurance done, or are they solely dependent on their spouses or their family members who may be getting like a family floater policy, something that we do not know if adequately covers them for all the diseases or which are susceptible to women specific, I want to understand in that aspect if you can explain how important is for women especially to look at insurance as a tool of protection, both health and life, and how should they go about it. If somebody is watching you today not got any of their health or life insurance in place, what is the best way to go ahead?
Very good questions, actually. First things first is how do you decide which insurances to take?
Yes.
So, one, the primary insurances that we must take at a personal level are health insurance and term life insurance. In general, India is very unpenetrated when it comes to insurance because our mentalities are it's going to happen to somebody else, not going to happen to me. So, we don't want to talk about that. Obviously, in over the last few years things are changing, and the good news is that the women are not very far behind. A large part of that has to do with the government schemes and also the family floater plans. So generally, even though women are not making the decision, women do get covered. Of course, overall as a demographic, we are very low. So all less than 10 or 12% of all the health claims that come actually get passed through insurance. So the awareness is still lacking. How do you start? Two must-haves are health insurance. So if you're working for a corporate, chances are that through the employee benefit program, you have a certain amount. If you are in a city, at least start with a 5 lakh cover. If you are given that as a corporate, the risk is that if you leave that corporate, what happens to the health insurance plan? Because then that gets lost. And with age, it becomes harder and harder for you to actually get health insurance plans with all the same benefits because you might have more pre-existing illnesses and so on and so forth, and the premiums become higher. So it's better to start early. At the age of 25 is probably a good time to start. Minimum, I would say, for the urban areas, start between a 5 and 10 lakh cover and keep it going at a personal level, regardless of the corporate plan. The corporate plan has to be over and above that. Then coming to life insurance typically as it's sold has two elements. So there's an endowment or an investment element, and then there is a pure life investment, which is called the term insurance plan, which basically gives the family of the deceased a certain amount, but only if the event is triggered during the duration. Now, if they are very cheap plans, a term plan will cost you maybe less than 10,000 rupees per annum if you go for a 1 crore cover.
Yeah.
So those are the cheapest. They're available online. Best to go with an IRDA licensed top-notch company. Go look at and do the research and actually buy that plan online. It's fairly simple. It's a fairly commoditized, straightforward product, but that has to be a must-have. Ditto for health insurance.
Sure.
Lots of plans out there. Take a family floater or an individual, but start early.
But starting is very important. So Gandha, let me bring you in the conversation again. You talked about how gold, silver, those are essential parts of a portfolio. You also talked about mutual funds. That is definitely something that all the women investors must look at. Now in gold and silver, you did give us an option that, you know, one can look at mutual funds, one can look at ETFs, one can also look at bonds as well as a pure play investment form. What about mutual funds per se? If somebody does not have an idea, what is the best mutual fund for a woman to start off with, and what is the strategy that one must follow? There are two ways: lump sum, there is SIP, and then there are floods, you know, there is a plethora of mutual funds out there which is bound to confuse anyone, let alone women who may be just starting off. Tell us, how does one really narrow down the research and get things right for investing going forward?
So I think, Sakshi, I would not like to talk about any particular mutual fund. There are 45 to 50 mutual funds houses in India. So you can select as per your investment horizon, your risk appetite, and your goals, particular goals, whether you have short-term goals or long-term goals. So, but then one thing to look at it, I mean, in terms of the strategy, I prefer SIP option because you cannot time the markets. We are currently standing at record highs. So if you invest all your money in one go, there could be downside risk because markets are dynamic and volatile in nature. So that can lead to a stressful environment. So it's just better to go for SIP options. Here you can get the benefit of rupee cost averaging. Month on month, you can keep building your corpus. And that would be the best strategy to offer in terms of the mutual fund industry.
Okay. And categories? Yeah, and which are the categories that you'd advise first-time women investors to go ahead and explore?
So I think at the moment, India's theme is more infrastructure driven. Government is spending a lot on infrastructure. So that is a theme which I personally relate with. And I think you can certainly look at mutual funds which are based more on infrastructure, or you can look at mutual funds based on index investing. So these are two, which is a form of passive investing. So these are two themes which I personally find very, they're likely to find a lot of traction going ahead also. So you can certainly look at mutual funds based on these. Apart from that, I think you can also, if you have certain knowledge about markets, you can also start to understand various financial concepts, keep upgrading yourself and keep reviewing your portfolio. So you can also shift your mutual fund portfolio into debt at a time when the equity markets seem to have peaked. And then you can again keep changing your portfolio allocation through debt and equity exposure. And also as per your age bracket.
Okay. Supriya, what about real estate? You know, that has been a long-standing investment option for most part of Indians as well. We've seen a long haul of underperformance in the real estate space. Again, the space is picking up pace. How would you really advise women out there to go ahead and look at realty as an investment option? Of course, it's an expensive purchase. A lot of people really have to pool in as a family to go ahead and buy a real estate, and usually it is for consumption, rarely for investment purpose for a large part of Indians as well. But then you also have newer forms like REITs that are coming up that actually give you in a smaller ticket a benefit of a real estate. But do you think women investors must explore real estate also?
I think it's a market that you must completely understand before you go into these investments.
Yeah.
Because there are title issues and it's all about location. So real estate markets across the board might not do well, but there might be certain pockets where if you have the knowledge or you have insight, then you can get stupendous returns. So that's really, so unless and until you understand that particular market, I think that is a slightly more risky asset class in my point of view. And historically, that's really the way it's panned out. Plus, there are title issues which continue to prevail. So exits are much longer. The yields as an investment are not really at par with all of the other asset classes. But if you have insight, surely go for it. But I wouldn't tell a first-time investor to really go into that particular sector as a must-have.
Okay. So, Gandha, what about direct stocks? You know, a lot of women investors, like you also pointed out, the demat accounts are constantly rising and more participation from women is really coming forward. And, you know, a lot of investors looking at the stock market's robust performance over the last few years, they don't want to miss out on this large opportunity that they are getting. So, you know, for someone who is an absolute beginner, what are the best ways to approach individual stocks and maybe create a portfolio which can be there for long term and provide them safety or maybe perhaps lesser risk and yet at the same time give them, the benefit of equity market performance?
So in the current environment, a lot of investors are getting attracted towards Indian equity markets because India is poised to grow at the fastest pace, and we are poised to become a 7.5 trillion economy by 2030. So India's growth story can be attributed to large and youthful population, the economic reforms, the increasing urbanization, the advancements in technology, and a growing middle class. So all of these factors imply that we are poised to grow from here on. So even though we are currently standard at record highs of around 22,500 mark, there can be some volatility, there can be certain dips, but then if you are looking at a slightly longer term horizon, I think you can certainly allocate some part of your portfolio to direct stocks also, but then I would like to bring in a word of caution. First, gain some knowledge about economic concepts, and then only start direct investing in stocks. You can also seek professional advice if required. So in terms of the direct stocks, I've selected certain stocks for a period of around 1 to 3 years. If you have a slightly longer term horizon, then you can look at these stocks. The first one is ACC, which is from the cement sector. With the government's focus on infrastructure development, I think ACC stands to benefit because there will be a lot of traction in the cement sector, a lot of demand for cement. So ACC, which is currently hovering around 2630 levels, I think my targets for next 3 years are around 3500. So this is one stock you can certainly allocate some part of your portfolio. You can start from as low as 10,000 and you can increase your amounts as you gain understanding of these markets. The second one is Aarti Industry from the chemical sector, which is currently around 660. The chemical sector has been a laggard in the last 2 years, and I think it is poised to gain from here on. My targets for almost 3 years are 1050. And the third one is Adani Green. There has been a lot of focus of the government on the solar energy sector. So this is one of the largest solar power sector company and is poised to gain a lot of traction from here on also. So 1940 currently CMP. You can buy it here also, and in case you get certain dips towards 1750 odd levels, you can add more. And my targets for 3 years perspective are 3100. The fourth one is Vedanta. With the government's focus on the metal sector, I think this stock is also poised to increase significantly from here on. There can be some corrections on the way because markets are at record highs, but then you can ignore the noise and you can stay invested for a period of around 3 years. In case you have a slightly longer term horizon, my targets are 450, while there is a strong support in place for this stock at 150 mark. In terms of another sector, technology, which is a major part of the India's growth story, I have selected Wipro, which is currently around 514 mark. And from 2 to 3 years perspective, I see the stock heading higher towards 815 odd levels. So these are slightly longer term picks. There can be some declines, which would be good buying opportunities to add further also.
Okay, well, on that note, thanks a lot to both Supriya and Sugandha, you for sharing such wonderful insights with all our viewers. Some of the key takeaways for this from this conversation for all our women viewers are to start off, getting started is the most important thing if you have not yet started off on your financial planning journey. Of course, look at your financial goals, speak to your family members, chart out a trajectory for yourself. Where do you want to achieve some of the goals along the way? Align your goals with those investment options. Have a diversified asset allocation when it comes to your planning. There's also insurance, which is an absolute must, and have that in place. Both health and life insurance is something that you must definitely go for, because both men and women are now breadwinners, and they are contributing to the families, even if you're not an active breadwinner. But even then, you can actually look at insurance as something which is a protection for your own children as well going forward. So that's absolutely essential. Real estate only if there is some kind of an insight that you have before, or you have an expert to guide you, only then you should go for it. But gold, silver clearly should be a part of your portfolio. Mutual funds is what you can start off with. So Sugandha, talk to us about index funds, which are the safer bets for you to start off with as far as the mutual funds are concerned. And in case you want a little bit of risk, go ahead and go for thematic, like infra-based themes, thematic funds as well. And of course, apart from it, the direct stocks list that Sugandha has shared with all our viewers. Many thanks to both of you for speaking to us on this very special edition, and here's wishing you both again a very happy International Women's Day. All right, we will wrap up this very special conversation right here. Here's wishing all our women viewers a fantastic year ahead, and I hope this is just the beginning for your bright financial future.